Rocco, we're on TV. All right, what's going on, everyone? It is Thursday, August 8th, 2024. Some stuff happening in the market, so I wanted to get back and have a little update for y'all. Technically speaking, market was up nicely today. A huge day for the Qs, up 3%. We said Mama said you were gonna get days like this, right? Where semiconductors rip back 7%. It's exactly what we had happen today. The semiconductors up about 7%. So let's have a look-see here. Boopity boopity bop. Let's show our screen here and get involved with what moved today and why. All right. Show our screen. All right. So today was actually much more a focus on Hong Kong and China and healthcare. I remember Eli Lilly had reported earnings, and people are killing off Ozempic and Moderna, I think, is their line. Makes me think of that South Park where, anyways, very fun. If you should watch about the prescribing Lizzo. Anyways, so Hong Kong, China, big rally today, 2.5% or so, 2.6 for Hong Kong, 2.7 for the FXI large cap, and then healthcare had 2.2. Gain. So very nice there. And then the subsector of biotech more strictly, that was up 2.9%. Very nice day. And then oil up 3%. So positive, you can digest this as positive, growth numbers, as it were. It was actually reduced jobless claims, I believe, here as well. But I just care about how the market interpolated and digested the moves today. So let's take a look at these. There's actually and this is why you're going to note this here, no big multiple sigma down moves today. So pretty interesting. So that's, to me, the definition of kind of basing. I know a lot of people thought there were a lot of days of decline this week, but I think the markets have been trading actually relatively well, except for the close the other day. We'll take a look at all this. And the best trades of the week are still, because volatility had exploded, is in the past 5 days, long volatility, long nat gas. So we'll take a look at that. I hope it runs a little bit more so I can short it. And then short the DXJ, that Japan hedged ETF is still, down to 6% on the week. So let's take a look at some things. Okay. So first we'll do the S&Ps. Let me boopity bop. Switch my screen here. USA was getting their butt kicked by Serbia. Hopefully that ends. Now, let's see the markets here. I saw Creed last night in Jersey, sold out in 2024, singing "Can You Take Me Higher?" And guess what? The market's singing the same thing. Can you take me higher? And it is. So a nice trading day. Here was a 9:30 open. You see this orange line is a volume weighted average price, and a beautiful day. Even when we got the small sell candles at 11 a.m. or the European close, and a little bit of a doldrum here at 12:30, we still held VWAP with quite a bit of cushion and closed at new highs at 4 o'clock. Tells me that the buying potentially is not over yet. Zooming out here. Okay. I can't say that I'm shocked by any bit of this. I said 5,100. After we had the flush, I thought 5,100 was going to hold. It was equivalent to our 30% 14-day RSI oversold level. Thought buyers would step in, especially since it's about, that was 3% or so, which is a reasonably good and pretty historically reliable position above the 200-day moving average for it to stop. And they'd actually, we were putting in 3-month lows. Usually a strong performer is not going to put in too much more weakness than that. That's exactly what happened. And I said, what's going to happen now? We have a date with 540, I'll just say, 540 to 542, right around there over the next 2 weeks or so. I'll say by the, about 2 to 3 weeks. So by the end of the month, and it looks like we're getting to just that. So about another 10 points or 2%. Rocco, you're with me, bud. We got to inform people on markets. So I'm going to let him out. He's annoying. So we had 2% today alone. So that's exactly what I'm just basically saying can happen for the next 2 weeks. So not anything crazy. Very, very expected. Okay. And that candle, look at that hammer candle right here on the bottom. Just put it in there, and we're going to go from here to 518, our new local support. And I think all these things are converging. We're going to get another 2% or so over the next 2 weeks. From here though to that 2 weeks doesn't mean we don't chop around. It's a straight line up. Considering we only have 10 more points in 2 weeks, right? Is my target, and we did it. You did an equal target move today. Obviously, I'm not saying it's going to do everything by tomorrow. So give back, up, down, up, down. But the earnings, for the most part, in terms of the important firms, are pretty much out by I think early next week. Even if now it's pretty much all done from all the important tech earnings. Nvidia is the last one, but they're 3 weeks or so away. So yeah, that's my move for SPY. Let's take a look at some of the stuff that moved today and why. And then tomorrow I'll have a big end of week video to really recap everything that happened. So yeah, that's my call on the S&P accumulation period for the next 2 weeks or so. All right, so Hong Kong was a big mover today, up 2.37%. It's been pretty much a loser, as you can tell from this chart. Had a little bit of a fake out, showing people that maybe this is outperforming from May 3rd right there to June 6th. Typically, my mark over 200-day moving average is a month to show that it's true or not. And this had just under 5 weeks, so this sometimes it's art and science, but nothing more for that. And now a big rally. Now what? So I think this wants to be accumulated a little bit more, but not all the way to the sky. So maybe like 1590. So that's a big gainer today. So I think maybe you get to the top of the band, 1590, and then after that, I would think it descends a little bit towards 1535. So that's my call on Hong Kong. Larger FXI, the large caps. Let's take a look at this. Haven't taken a look at this chart too much in a while, I don't think, in the video. Yeah, so this isn't a super strong performer. You see the support here, the 200-day moving average, pretty much flat actually at 24.96. It's not moving. The highs of FXI are back here in May. Hard to even think about because it's been not such a great performer, but it is holding a 200-day moving average. It had kind of a tough test on the bad market crash on Monday. But now what? So I think this goes up a little bit more. It probably goes above its 21 exponential day moving average, which is 25.65, but not a ton more than that. I think this gets pretty tired around. I mean, yeah, what's that, 120? Like 26.30, right around here. I think it goes maybe above there to there, right around 26.30, and then starts to trade a little bit down towards 25.30. All right. XLV Healthcare, a big surge today. Healthcare was up 2.2% as well. Almost looks like program buying, where they just said buy Hong Kong, buy China, and buy healthcare. But let's take a look. So this had a kind of an ugly move from its 52-week high. It's pretty crazy. It happened last Friday. We hit 152 essentially, and then it went all the way to 145, and now we're back up again. So now what? I like the momentum in this one. I think this is going to try and squeeze towards first stop 151, towards that today, or making its way towards that, and then we said the 52-week high is 152 basically. Yeah, I see this pushing past it to new 52-week, and I believe this is new all-time highs for this. Yeah, so this would be new. I'm calling for new all-time highs in healthcare in about 2 weeks, and my target on that's about 153. All right, XOP was a big mover today, up 3%. So even more than the other assets we were just talking about. XOP, let me take a look. Rocco, you got this in your portfolio? No, I think he's peeing on a box. Wonderful. Okay, so XOP, not the best looking chart. This has, you don't have to be a technician to see this has lower highs, lower highs, lower highs, lower highs. That kind of looks ugly. You don't really want to keep on putting good money after bad. And then the 200-day moving averages is black line. You really want to pay attention to this. And it's had an ugly fallout since last week. So now what? I think this will be an accumulation mode just off of extreme discounting. And I think it makes its way towards 140 to 141. The 200-day moving average is 143. I think that's a little bit lofty. This is kind of a negative story. If people are scared about recession and global growth, they're not really going to think that oil and gas explorers are really going to they're just not the best use of your dollar. Not super high growth area. So yeah, I think this gets to 141 first stop. I think that'll do it because just it's pretty extremely literally working off oversold. Here, it got all the way to 25 RSI on the day of the crash on Monday, but it managed to close, higher. Had not a horrible week, rallying off the lows there. But yeah, as I said, it's going to try and get towards this 200-day moving average 143. I think that's absolute best case scenario, and then it starts going lower again. But not really excited about investment in there. All right, so VXX is the biggest gainer in the past 5 days. There's a lot of volatility, though. It's what we've been talking about. I'm saying volatility is going to crater. I was calling for, are you seeing this thing in the, I think I said high 40s, 50s. This thing shed another $6 or 9% today. So it's exactly happening. And I'm not some sort of Nostradamus, predictor, prediction person. The point is the ranges, ideally, especially as you go to the upside, the inputs are getting less. So in terms of what the volatility contributions are daily, so this is going to come down where you had versus that Monday volatility day where you went from 20 to 80 or something in the VIX index. So as you get smaller inputs, it has to go down. It's not going to maintain the same velocity. All that being said, I see this in distribution mode and then some. And look at that. This is why I said this is going to be a fake out. The 200-day moving average calculated, adjusted for split right here is 58. It's $4 away from that now. So it's probably on pace to do that tomorrow, unless the VIX, kind of explodes. So this tells me basically everything I've said before. This is going to go, I'll say sub 50, okay, in the next 2 weeks. So I think you'll be seeing a 40-ish handle on this. So say, what is that? So say I'm going to get 14 points. It's pretty major. I mean, I'm calling for another 30% reduction or so in the VXX, and you can interpolate that for across other, volatility indices. All right, let's look at nat gas. So the VXX is the best gainer on the week. Nat gas is second, though. So VXX is up 26%. UNG is up 8%. Let me see if this is setting up for sell. I would love to. So this is still just getting going. I mean, this just hit a 52-week low, so the momentum is to its downside overall. This was during the crash on Monday. It hit 1257, and now it's up, pretty sharp. It's up 8%. It's at its 21-day exponential moving average right now, so it may take a little bit of a pause. The actual level is 1430, so 12 cents away, or just a touch under 1%. This probably, I want to say, just because it's so beat down, I could see positioning, lifting it a bit. Although, like I said before, I don't think XOP and the energy sector is going to get a ton of the dollars. All that being said, 130. This probably gets to like 15 tops. If you were to get to 15 even, it's very close to the top of the bar. And then I would think it starts to descend again. But I would say this is an accumulation mode towards 15 for the next 2 weeks. So this likely continues. EWZ or EWZ, Brazil. So you see the biggest gainers of the week is volatility, nat gas, and Brazil. Volatility, a loser. It's up. Nat gas, a loser. It's up. Brazil, it's been a loser. It's up. So you can see there's been rotations going to the other sides of things that have been underperforming. What are we saying for Brazil? This thing looks like it wants to, it's like kind of popping in the charts to me. It looks like it wants to go to 29. Just to go lower again, at least to go towards 27.75. But I see it pushing up towards this, right around here where my cursor is, right around 29, and then very likely moving towards 27.75. All right. KWEB, the Chinese Internet ETF, doing pretty well this week. I mean, it's up 2% for the week, but 2.8% of that was today. So take a look at the chart. This shouldn't vary too much from when we looked at FXI earlier. This looks like it wants to squeeze up just a tad more. I think this gets to 27.30, right around there. And go figure, the 200-day moving average is 27 even. I think it's going to try and do this kind of leapfrog thing where it goes to 27 and then straddles it and goes below. It's just hovering around its 200-day moving average, oscillating there. So I see this going to around 27. As I said, maybe 27.25, actually. And then before probably just cascading a little bit lower towards 26 handle. Okay. Pretty interesting overall. If you usually try to digest these moves and say, okay, so what do we have here? What do we have here? And then put it together holistically. Pretty interesting. ILF, part of this is going to be the big rise that we've seen in Brazil, but ILF's had a good, not good, but a decent week. It's up 5%. I'm sorry, up 2% in the past week. 2% of it's today. Look at this 52-week low on our crash on Monday at 22, and you got a quick, 10% from there. I'm doing it from 5 days, so it's basically up small 2%. Let's look at our forecast for this. Yeah, this looks good. This looks like very similar to the other chart I was just talking about. This looks like it wants to get to 2630-ish, like right around here. So a little bit quite more upside. And then before going a little bit lower towards 25. So interesting. I see this kind of, happening in the markets, a little bit higher across the board and then going lower. All right, top 5 losers of the past 5 days. No repeats in charts. DXJ, the worst place to be if you're long over the past week. DXJ down 6%. It's actually tied with the next security we'll load up. But let me look at this first. DXJ. So I would think this mean reverts and goes higher. Where specifically? This should... It was up 2.6 today. Very nice. Very nice. This should go to at least 101, which is 200-day moving average. And I expect that to happen within a week or two. You always got to be careful with names like this. But I think this 200-day moving average is not going to be, I think it's going to recover pretty quickly. I think it's going to recover it soon. Tomorrow's Friday. I'm not going to say it's tomorrow, but at some point by next Friday, I think we reclaim 101 here. And then next stop would be, I'm seeing a lot of convergence of the moving averages. I mean, next stop here, you'd really want to see it get to 106. So that's 8 points away, or, like 8%. There's still money, I think, to be made in this. Obviously, if you're able to stomach the volatility. ARCG is the second worst space in the past week. So these are biotechs, but through Kathy Wood's lens. Okay, so it's basically her biotech firms. Let me take a look at this. This was my short. Now I'm short IWM, and it's working pretty well. So this was up nicely today, up almost 8%. I don't think it's going to take out this 200-day moving average. It really hasn't been able to do that with gusto convincingly since March. So all that being said, this might have a couple bad days left with a floor of 22.55. I see this support level holding. I'm not saying that it's going up and away from here. I can see maybe another day or two lower, not sure. But after that, I do think this wants to dance and get towards 25.30, right around there where my cursor is, and possibly like 27, try to make a run at the 200-day. And if, to be very honest with you, if this lines up with my 15 to 18-day cycle work of S&P strength starting to give way, I would actually pivot, and I would use this as a short for the next one because I like the tags of the 200-day moving average, especially if it comes out as oversold on and get a new price high. Basically, I got a bearish divergence, so I got a new price high. For example, if this were to get to 27 or 28.10 rather, right? It's above my 200-day moving average. I don't think it's going to hold, and I get a lesser RSI with a higher price. That's going to be divergence. That's going to be your signal. You heard it here first. All right, so that's ARCG. I'll let you know if I do that move. CAF, or basically small caps. This is a kind of it's not really the Russell, but this is a form of the small caps that we've looked at many times. This has been hammered down 6%, as has IWM, the Russell. So now what? I think this is, it might have another day similar to what I just said about the ARC stocks. This might have another day to the downside, but I do like the support at 42.5, right around there, the bottom of this wick here, this candle. So I think that holds. There's been good levels since July 10th, or a month of support. And I think this is going to make a run towards 45.5 is, pretty reasonable. That's right here. The 200-day moving average is rising as a 45.80. It's going to be important. I want to see it reclaim that if you're truly going to have belief in the small cap rotation for the last 4 months of the year. I want to see it take this out. My rule is, for me personally, you got to have more than 30 days consecutive, right? So it was a super start till here. So June 7th, and then it was a loser till July 16th. That's not really good. And then now you're in this new regime where it's closing below it as of August 2nd. So I need to see this by September 2nd. I think that's going to do it like this week. So I'm not too concerned. But that's what I would really want to see. It reclaim its 200-day moving average specifically for this ETF at 45.80 and hold it. All right. EWI, South Korea has been hammered this week. They also got really, really hit. Massively declined on the crash on Monday. Let's see what's going on. Not the greatest looking chart, although it did put in its 52-week high on 7/11 day. Now what? I guess it's slowly trending higher. You see the slope of the 200-day moving average is not really great. It's 61.20 last year, and right now it's 63.20. So definitely better areas to make your money. This thing will go $5 below and $5 above. I mean, a little bit more below, but not the best use of your dollars, I don't think. But specifically, if you do want to play this, yeah, I like the support at about. Well, that's not really fair. I have a calculated support here about 61.90. I would want to see it reclaim. I mean, you have 4 ugly sessions and it had such a collapse from here, so you got to give it a little bit of slack. But this just doesn't have much wind to its back. Truly just working off old oversold conditions after being overbought in July, oversold in April. You know, it's been pretty much all a loser except for that July mark, and then 2 days later hit a 52-week high, and then recently this week it's cratered. So yeah, I think this is going to make a move towards. I think it's going to reclaim its 200-day moving average pretty soon. Within the next, looks like within the next week, by next Friday. And then I think it has a dance at 64 half, I want to say. Yeah. If you want to say it, just say. Yeah, so 64 half. So I think it reclaims this. And then that's exactly kind of what you want to see. And then you're going to start to see that 200-day moving average start to pick up a little small, but a little bit more slope. And then it holds and closes there. Not the worst looking chart. And lastly, home builders. We've been talking about this. I said this was super frothy. It was going to come off. And that's exactly what happened. XHB is down 6% over the past week. Today it was up 1.8. Let's take a look. When it was July 31st, was that the high? Yep. We said this was crazy high. It was trading 121. I said this shouldn't have been over 117. I said we were going to 111. Voila, here we are today at 108. All right, it was lower than today. It was lower than that. It was as low as 105. Now, what is in the cards here? I like the support on this at 102. All right, that's a beautiful slope on the 200-day moving average. Calculated support and even quite visually support. Going back to the July lows is 102 right there. I think this looks like it's headed to 111. Again, exactly where I called for it before to decline. Now that's where I'm saying the next target is right around 111. It's only 4 points from here, about 3.5%, and I give it 2 weeks or so to do that. All right, so best 3 absolute trades of the past 5 days: long volatility, long nat gas, short DXJ. If you were in those, congratulations. I will have another big video to do tomorrow. End of week, we'll recap everything that mattered. All right, peace. Go USA.